Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the most bullish scenario where the low is in, your range has ended, and we are looking for impulsive continuation to the upside. In that case, we are going to be looking for an impulse to the upside in a 1, 2, 3, 4, 5, a leading diagonal structure, or a double 1, 2. 1, 2, 1, 2, impulsive continuation to the upside in a wave 3. An impulse is a possibility here. We can count a wave 1, 2, 3, 4 and look for one more high in a wave 5 to then finish wave 1. If we look at the resistance that we have above price, we have some resistance around 71k, which is a daily naked point of control, and just above 71k we also have 71.4k, a daily, another daily naked point of control at 72k, and then we have another box over here between 73.1k and 73.5k. After this blue wave 1, we're then going to be looking for a retracement to the downside in a wave 2, which should be a 3-wave corrective structure. If price moves towards the upside, these fibs over here will also move to the upside, because currently I took them from this low to the high, but of course we have to put them on the high of wave 1, which in this scenario is not yet finished, as we still aim for a wave 5 to the upside. Your most bullish alternative is that this is a double 1, 2. Wave 1, 2 is finished, your second 1, 2, and you look for impulsive continuation to the upside in a wave 3. The second bullish scenario is a more complex sideways structure in a wave W, X, and a wave Y, where we are looking for this wave X to finish. In this scenario, this low here is not the end of your corrective structure. You're still expecting wave Y to the downside, and wave Y has to either be a flat structure or a triangle, because wave W here is a zigzag. Then we have a zigzag, flat, and flat in a WXY, finishing the blue wave X, and then we expect a wave Y, either a flat or a triangle in blue over here. The common target area for your wave Y in white is between the 0.618 and the 1.236 trend-based wave extension, taken from the low to the high of W to the low of wave X, giving you a target area between 69.3k and 71.4k. The 1.618 is an uncommon target for your wave Y, all the way at 72.6k. Your bearish scenario is an impulsive structure to the downside. Wave 1, Wave 2, looking for a wave 3 to the downside. Your wave 1 here has an extended wave 5, because on the lower time frames you're going to be counting 1, 2, 3, 4, 5. So your wave 5 is the longest, strongest and highest volume move to the downside, which is rare and therefore does lower the probabilities for this to be an impulsive structure compared to this to be a corrective structure. Inside wave 2, we then look for a 3-wave corrective structure ending somewhere between the golden pocket 786 area preferably, as that is your common target area for your wave 2. The 886 for a wave 2 is very rare at 71.3k. The moment price hits the 886, the probabilities will significantly decrease for this scenario. Any move to the downside will have a higher probability of being a wave C or a wave Y, because the 886 is very rare for a wave 2, but common for a wave B or a wave X, increasing probabilities to sooner or later take out the high at 72k. Preferably this wave 2 is also finishing quite quickly. We don't want to see price continuing this range here until the 5 fib time, sitting on the 7th of June. Locally inside that wave 2, we then have a WXY, zigzag in W, flat in X, flat in wave Y. Common target for your wave Y is between the 1 and the 1.236 on the chart, taken from the low to the high of W to the low of wave X, giving you a target between 69.9k and 70.7k. Of course, we also know that the 71k resistance is just above the 1.236 here at 71k. Locally, the probabilities were higher to move towards the upside. As explained in the live stream, the moment price hits the 886, the probabilities will significantly increase for price to take out the high, which now has happened during the recording. So these probabilities have played out, very nice indeed. And now we're going to observe the reaction at resistance areas. The local bullish CVD divergence has also played out, higher low in price, lower low on the CVD, the high has taken, so that's very nice. And the bigger bullish CVD divergence target is taking out this high, which we have not yet done, but we might also have these bullish CVDs playing out the moment price moves towards the upside just a little bit more. And if we then finally look at the probabilities of the different scenarios, then on the 15-minute time frame, the probabilities were higher to take out this high, which has now happened over here, so that is very nice. And on the 4-hour time frame, the probabilities are higher for the bullish scenarios unless we start to see strong signs of weakness or price moving at least below 66.6k. Now, in both the bullish and the bearish scenarios in this range, we were looking for price to take out this high to at least create a 5-wave impulsive structure. In the bearish scenario, wave 2. In the bullish scenario, we're either looking for a wave 1 over here, or of course a finished wave X and then a wave Y to the downside. We can now observe how price is going to react at resistance and also look at a potential retracement. For the bulls, we want to see a corrective retracement to the downside, after which we then look for continuation, and the bears want to see impulsive continuation to the downside and strong signs of weakness. But at the moment, the probabilities remain bullish in this range as we don't have any strong signs of weakness, and price also did not move below 66.6k. It has to be said that it is quite difficult to end the range at this particular low for the bullish, very bullish scenario, which is this scenario here, where this is the end and we look for a wave 1 and then eventually continuation to the upside. Therefore, between the two bullish scenarios, a WXY or a 1-2, the probabilities at the moment would be a bit higher for a continuation of this range in a WXY. Again, we're going to observe how price is going to react at resistance and then take it from there. As long as price is pushing to the upside on volume, from an Elliott wave perspective, it makes most sense to wait for a range to form and then reanalyze that range and potentially readjust probabilities. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.